have a generation of Canadians crying foul over unaffordable home prices. They shouldn't count on the Bank of Canada to ride to the rescue anytime soon. Our real estate reporter Greg Bunnell joins us for this.
Governor Polas has a rate decision next Wednesday. He carries a fairly blunt instrument when it comes to trying to rein in the housing market, and that, of course, is the overnight target rate. But the bank has acknowledged in the past year and more so that the fact that they've kept rates so low definitely playing a role, a very big one, in the growth of debt we've seen among Canadians, the record levels we've reached, and the majority of that mortgage debt. Metro Vancouver, we found out this week, the average price is soaring 22% to $795,000. In Toronto, we saw the average price for the Greater Toronto Area jump 15% to $685,000 in change. RBC calling both markets increasingly and dangerously unaffordable. So, does Governor Polas take a look at what's happened this week and think, well, maybe I could raise rates? No one's thinking that's going to happen, but that would definitely be a cooling of the market. I asked a few of the economists on Bay Street what they thought that the governor must be thinking of these numbers. Doug Porter over at BMO told me eventually housing is going to be a factor in prompting the bank to raise those rates, but probably not until 2017. Mr. Porter adds that when it comes to holding at 0.5%, the housing market alone and concerns there, even though the bank has said it is concerned, won't be enough for them cutting again if they have to. Benny Tal over at CIBC, it tells me that housing, definitely the elephant in the room for Governor Polas and his governors as they take a look at the situation. He says with the recent improvement in the Canadian dollar, if the governor's thinking perhaps of cutting rates again to get that dollar down and increase our trade position, real estate would be a strong reason not to cut, because you'd only fuel an already hot market. And really, a lot of economists, including Mr. Tal, saying you cut again, you're really not going to fuel the economy beyond housing all that much more.
Right. Well, the Bank of Canada has gone from being the first line of defense to the last.
Yeah, and they've made that clear several times in the last little while. The last one from one of the deputy governors, Lawrence Shembry, giving a speech late last month. It was all about the risks to the Canadian financial system, housing, the debt loads, a very big risk, but they made it pretty clear we are the last line of defense. He actually said other measures, including public policies, are better suited. And we did have a public policy kick in on February 15th, a new Liberal government making it mandatory that for the portion above $500,000 when you're purchasing a house, you put down 10%, not just 5%. Still 5% for the first $500,000. The Toronto Real Estate Board telling us this week that did make a difference. After the 15th, sales were very strong, a record February in that market.
All right, thank you, Greg. Greg Bunnell.